Hey, what's going on, guys? Dr. Sean J. Harris here, and I have the pleasure to be with my two beautiful children here. Introduce yourselves, guys.
Hello, it's Kennedy.
Hey guys, it's your buddy Caden.
Hey, listen, we're going to have a conversation with you guys. A part of generational wealth is being able to pass it down from generation to generation. So it's important that we teach the kids information about creating generational wealth, but more importantly, we have to have sessions where they answer questions and give us back feedback so that we know that they are actually learning and understanding what it is we're teaching. So today, guys, what we're going to talk about today? Insurance, life insurance. So what are the two types of insurances, life insurances?
Whole insurance and term insurance.
Okay, and what's the difference?
Whole insurance lasts for your whole entire life, but term insurance only lasts for a short term.
Now, Kennedy, what is one of the most important reasons why we like to use life insurance?
We like to use it because it's private family banking.
That's right. So private family banking, we're able to conduct our own banking business throughout the house, right? So if you guys want to take a loan out for to start a new company, or if you want to go to school or anything like that, buying a house or a car, we can pull money from the private family banking system. So with that, who gets to keep the interest?
You guys.
Yeah, we do as a family, right, through the family bank. So if you pull money from the private family bank system using life insurance, do you have to pay the money back?
No, not necessarily.
That's right, not necessarily, but it will lessen the amount of the value of the policy though. So we always want to pay it back, but you don't have to necessarily. And like we said, you get to keep the interest, right?
Yes.
Yeah.
Kennedy, way down the road when you guys have kids, what's the first thing you do? When you have your first child, what are you going to do?
You have to give them life insurance. Because when they're younger, it's better to get life insurance when a child is younger because it'll be cheaper than when they're older and have health problems. Then it'll be a higher money.
So when you do it as the kids, then when you say it's cheaper, how much roughly?
For kids, it would probably be $15.
15 or lower, and they're first born. A lot of times, depending on what policy you use, what company you use, many times they get on what's called a child's rider, and it's really free a lot of times, right?
Yeah.
What is a beneficiary?
It's the person receiving the money.
So, Kennedy, if I have a policy on you, or if you have a policy on yourself, who benefits? If there's a policy for Kennedy, for your life, who gets the benefit?
I get to choose the benefit for the person I want to be benefit.
So a policy on you will benefit your beneficiary, right? Which will probably be your kids, right?
Yes.
And if you have a policy, Kennedy, on your kid, who is that for? Is it for that kid, or is it to benefit their kids?
To benefit their kids.
Absolutely. So that's one of the key things we want to do is we want to just keep doing that. So every time a new member comes into the family, we want to put a what on them?
Life insurance.
Life insurance policy, right? And then it ties into the whole family banking system. So that's one thing we teach a lot in our course about private family banking system. Let's see, I have a question. Can you have more than one policy?
You can have many policies.
Many policies? Yeah. So what do you think? Is it better to have just one policy, or is it better to have multiple policies?
Many policies probably to fall back on if something happens.
Absolutely. What do you say, buddy?
I would say the same. It's beneficiary to have multiple policies.
Absolutely. And one thing we always teach too with private family banking systems is you want to have a policy particularly on your matriarch or patriarch of the family. And here's why. Think about it. Most time, great-grandma or grandma, they probably only have one policy on them. So when that policy is executed, what happens is you may have enough money to pay off maybe her home and a nice service, a burial service, but typically there's not anything really left over because many times people have what's called a quarter policy or a $250,000 policy. Sometimes people have a half policy, which is a $500,000, or a full meal policy, which is $1 million policy. But imagine, guys, if everybody in the family had a policy on the oldest person in the family, which is the matriarch or the patriarch, right? So if 15 or 20 people all had a quarter policy on great grandma and great grandpa, well, we're all gonna pass at some point. We have to really accept that, you know, and I know sometimes this is a touchy subject, but when that person passes, guess what? Everybody is able to cash in on their policy basically, right?
Yeah.
And I just gotta believe that everybody can kind of pull some money together to make sure we give a good service, pay off any kind of debt, any real estate holdings that may be outstanding for great grandma or great grandpa. But everyone now just accumulated $250,000 or close to it, right?
Yes.
So imagine if 20 people in a family all collected $240,000, let's say for an example, or $220,000. So if it's a quarter policy, let's say that you're able to be able to keep 220,000 of that, and 15 to 20 people in the family able to do that, the family just built generational wealth in one generation, right?
Yeah.
So that's why it's super important to understand and be able to leverage life insurance. Can you borrow money against your policy or from your policy?
Yes.
Absolutely. And we just talked about you don't necessarily have to pay it back, but you want to pay it back. And so that's one of the most important things about insurance policy. Anything else that you guys want to talk about insurance that maybe we missed or you just want to kind of share with everybody?
Nothing else, no.
Okay, Kate, you got anything, buddy?
No.
Okay, well, guys, as we said, with building generational wealth, it is critically important to educate your kids, review back with your kids so that they truly understand. We don't want them just memorizing certain terms or things about insurance. You want them to truly be able to embrace it and understand fully how life insurance policies benefit them and just everything about generational wealth. You want them to know everything. You don't want them to just memorize and be like robots, but you want them to truly understand and take ownership of it. So guys, that is it for us with Generational Wealth Academy. So you guys want to say bye?
Bye, guys.
And remember, if Caden
can, you can too. Take care, guys.